Hey everyone, so it's time for another round of 13F filings, which are the filing from the SEC, which give us a wonderful insight into the big money managers and their stock portfolios, what trades they've been making in the most recent quarter. So to start off this round of SEC filings, 13F filings, we're going to start with the biggest of them all, which is of course Berkshire Hathaway's 13F filing. And there was quite a lot of changes that happened to Berkshire's stock portfolio in the last 3 months. He sold out of 5 small positions completely. He reduced positions on 6 stocks. He increased his position on 6 stocks. But the most notable change was a $13.6 billion investment into 4 brand new businesses. So today we're going to break down all of those changes, but zoom in particularly on the new investments added to the portfolio. I'll provide you some analysis on those businesses. And then at the end of the video, I'll help you figure out whether you should also be investing in these businesses, whether it's a good idea for you to follow Warren Buffett into these 4 new companies. If you do enjoy today's video, the best way that you can show me is by leaving a like on the video and of course hit subscribe if you want to see more content like this in the future. But with that said, let's jump into the video. Now, before we take a look at some of the new businesses that Berkshire Hathaway has invested into, let's talk about some of the other changes that happened to the portfolio, the positions he completely sold out of, and the positions he increased and decreased during the period. As I mentioned, there were 5 stocks that he completely sold out of that were once positions in the portfolio, but during the 4th quarter of 2020 were no longer positions in his portfolio. And those businesses were Barrick Gold Corporation, M&T Bank Corp, PNC Financial Services Group, Pfizer, and JP Morgan Chase. Now, as you can see, all of these businesses represented a very, very small percentage of the Berkshire portfolio prior to being completely removed. But for some of these positions, such as JP Morgan Chase, these are businesses that were once much larger positions in the portfolio and have been progressively sold down to 0 over the course of the last few quarters. Interestingly enough, Berkshire Hathaway's investment in a gold mining company, which many people believed was probably not Warren Buffett making that investment. It was likely one of the other investment pickers or stock pickers in Berkshire Hathaway that made that investment. But now that stock is completely gone out of Berkshire's portfolio. So that kind of dismisses anyone who believed that Warren Buffett may have changed his tune or changed his opinion dramatically on holding gold in the portfolio. They did hold gold, a very, very small amount, through a gold miner for a brief period of time, but that is no longer the case. Berkshire Hathaway also reduced positions of 6 stocks, so they sold down some of those stocks, but did not eliminate them completely. The first business they reduced was Liberty Latin America, which was reduced by 10%, but remains a very, very small part of the portfolio, just 0.01%. They also reduced Suncorp down from 0.1% to 0.09%. They reduced Wells Fargo from 1.3% down to 0.59%. Their General Motors position was reduced by 9%. US Bank Corp was reduced by a very, very small amount. But most notably, he continued to reduce his position in Apple, reducing it from 47% down to 43%, representing a 6% change in the number of shares held. Berkshire Hathaway also added to 6 positions during the period. These are 6 stocks that were not brand new, but were increased during the period, and most of these were pharmaceutical companies, which is really interesting because they completely closed out their position in Pfizer, which is of course the front runner in distributing and manufacturing a coronavirus vaccine at the moment, but he removed that investment completely and added to some of his other pharmaceutical investments, including AbbVie, Merck & Co, and Bristol Myers Squibb, and he also added to 3 other businesses, which were Kroger, RH Common Stock, and T-Mobile. Again, none of these stocks represent significant percentages of the Berkshire portfolio, so there's nothing particularly interesting to look at when it comes to these particular investments. But what is interesting are the 4 new businesses that Berkshire added to the portfolio in the latest quarter, one of which is now the 6th largest position in the Berkshire portfolio. Now, these 4 stocks were actually first bought by Berkshire Hathaway in the third quarter of 2020, but we didn't find out about them until this week because Warren Buffett was granted special confidential status when investing in these companies. What that essentially means is he asked the SEC if he could wait on disclosing his new investments so that he could invest more money into them before the public realized and started to follow him into those businesses. Because what ends up happening is something called the Buffett effect, which is once people realize or discover that Warren Buffett is investing in a company, people flood into that company, its stock price goes up, and it no longer makes it a good investment for him, which of course, if he loves a business and he thinks it's at a great price, he wants to invest as much money as possible while the stock is really, really low, while it is cheap. And when the public finds out he's investing in a business, he can no longer do that. In this case, the 4 businesses that he got special status for were Verizon, Chevron Oil, Marsh & McLennan Companies, and E.W. Scripps Company. Starting with the smallest and most insignificant investment made by Berkshire that was a new company added in the latest quarter, let's start with E.W. Scripps Company, which is an American broadcast television and radio company, and it was actually revealed that Warren Buffett and Berkshire was invested in this company in January of 2021. In January, the TV station disclosed that Berkshire Hathaway had a 24.9% stake in the company, and that Buffett had agreed to buy 23.1 million shares at $13 each to help E.W. Scripps acquire Ion Media for $2.65 billion. So in this case, rather than finding out from Warren Buffett and Berkshire's filing itself, we were able to find out because the stake was so large in the company, they also had to disclose who are their largest investors, and in this case, Warren Buffett and Berkshire Hathaway have almost 25% of ownership in that company. Today, the investment is worth $365 million, which is a substantial amount of money, but does represent just 0.14% of Berkshire's stock portfolio. The second company that Warren Buffett and Berkshire Hathaway added to the portfolio in the latest quarter was Marsh & McLennan, which is a $50 billion insurance company in New York City. Berkshire has an investment of just under $500 million, representing 0.19% of their portfolio. Taking a quick look at their financials, we can see that the business is very, very cash flow positive, which is something that Warren Buffett looks for, and they distribute a significant amount of their cash flows as dividends and share repurchases, which is again something that Warren Buffett is interested in because he wants businesses that produce a lot of profit, produce a lot of cash, and then deliver that to shareholders in the form of dividends, share repurchases, or in some cases, or in a lot of cases, I should say, businesses that use that cash flow, reinvest it, and grow those cash flows into more in the future. The third business that Warren Buffett invested into in the latest quarter was Chevron Oil, which is of course a multinational energy corporation, which is involved in the entire process from exploration, production, refining, marketing, transportation, and power generation. For Berkshire Hathaway, this represented a $4.1 billion investment during the quarter, making it 1.5% of the portfolio. And while for me, this doesn't really make any sense as we transition, or as I see us transitioning away from fossil fuels such as using oil, for Warren Buffett, it is very much in line with a lot of the other investments that he's been making recently, including an investment in 2020 where he purchased $10 billion worth of natural gas assets, including pipelines from Dominion Energy. So clearly Buffett sees something in this business and in oil businesses in general that I just don't see as someone who is uninformed about that particular industry. Because when I look at Chevron Oil, all I see is revenue that's been declining in almost every year of the past decade, profits declining from $27 billion in 2011 to a loss of $5 billion in 2020. So when I look at this business, I don't see something particularly attractive as an investment, but it's an area that's well outside my circle of competence, my area of understanding. So I will reserve judgments about this investment, and I'm sure Warren Buffett knows what he's doing with this particular business. But the fourth and final and most significant investment investment that Buffett made in the latest quarter was in Verizon, which is of course an American telecommunications company. It's the second largest in the United States after AT&T, and it's actually one of the largest investments that Warren Buffett has made in a single business in a very, very long time. This particular investment was $8.6 billion and now represents 3.2% of Berkshire's stock portfolio, making it the 6th largest position in the portfolio. And again, the surface level numbers really don't look that great. Revenue has been flat for about 6 years, profit is wildly inconsistent, and the balance sheet is pretty poor. They have $123 billion in long-term debt and just $22 billion in cash. So for me, it really doesn't represent a business that is benefiting from an expanding industry and from distinct competitive advantages, which would be demonstrated in the business consistently growing their revenues and profits as customers from other businesses are kind of sucked into this particular business because it has something so unique and so good that people have to come to that business and use their products and services. So we're not really seeing that with any of their numbers, but again, it's in an industry that I really haven't looked into deeply, so it's not an industry that I can make any particular judgments about personally. But considering this investment in Verizon and Berkshire's smaller investment in T-Mobile, clearly they are very bullish on the telecommunications industry from this point going forward. But should you be investing in these businesses? I'm sure it's something that a lot of people think about whenever they see that Buffett is buying a new business, wondering whether or not they should be following or cloning Warren Buffett and buying those businesses too. And what I would say is, it depends on whether you understand the business, right? I would never just blindly copy someone, even if it is Warren Buffett. I think it's a much better idea to invest in individual businesses that you deeply understand personally. So if you understand telecommunications and you also see something great in the future of Verizon like Warren Buffett clearly sees, then it could very well make a good investment for you. But if you don't understand telecommunications like I do, then you really have no business investing in those companies, particularly because these 13F filings are delayed, and Warren Buffett may, at this very point right now, he maybe have sold out completely of Verizon. So it's going to be very tricky for you to match his results by just copying him, because you're always going to be lagging behind waiting for the 13F filing. So it makes much more sense just to invest in businesses that you personally deeply understand. And remember, Warren Buffett is a huge investor. He's investing hundreds of billions of dollars, which means if he wants to invest in a small number of great companies, he only has a very select few businesses that are even big enough for him to invest in. Whereas you and me, much smaller investors, we have many more opportunities in smaller businesses that he can't even consider. So even though he may be investing in this business, if he was a smaller investor, there may very well be, and I would bet that there are better opportunities to invest in smaller companies that are offering a better rate of return long term. But that's all for today's video. I hope you guys enjoyed it and got some value out of it. And if you did, I would very much appreciate it if you could leave a like on the video. Let me know your thoughts down in the comment section below. And of course, subscribe if you want to see more content like this in the future. But with that said, hope you guys have a great day, and I'll see you in the next video.